Good morning, ladies and gentlemen. This is Clueless Day Trading Frank, and here's a pre-market report for a beautiful New York morning on Thursday, May 4th, 2017. Just wanted to update all of you on the previous broadcast, the precision forecasts and alerts that have been put in place every single day and every single week, and show you how precisely these particular charts and the forecasts come to fruition, which simply means profits in simple English. So here's the same chart of the SPY on the Quad Algo HFT platform, and identified the lows here based on the slow stochastics on the third, which was yesterday. They did a double bottom here, as you can clearly see, and this was the lows. The lows was this was R2. Um, Actually, it's R3. I'm sorry, S3. That's the third support, and you can see a large bullish engulfing candle reversal, which I identified and alerted, and on the SPX via the options or the SPY options, and the upside was marked. As you know, these are markers, and the previous highs of, you can look at the bottom, of the 1st of May were engaged, sold off through a series of structured volatility, ups and downs, which we played very successfully intraday as well as overnight. Um, and then this morning, this is where we are. So this is not magic what goes on. The reality of these charts are that they translate into real money for disciplined and focused traders and tactical traders who are both trading on an intraday basis as well as holding positions overnight, are benefiting tremendously, as we can see clearly from some of the members within the Clueless Day Trading Club. Undisciplined and unfocused, non-tactical traders, what I call emotional traders, or MOHTR. That's just a term for monkey on a hot tin roof. Um, in other words, they jump on every single price movement within the market without keeping an eye on the patterns, which I've consistently shown um, where the big money is made. So if you look at this pattern, for example, kicking off around the end of last month, this is clearly, as I have repeatedly stated on my real-time tactical charts posted on the real-time Twitter feed, um, is a W formation or a double bottom dragon bullish. The pattern completion, the first stage of the pattern completion, is complete as of this morning when the market opens, and then we have a little ways to go to engage the all-time highs, what we call ATH, which is roughly around 2401 or so on the S&P 500, and approximately 240 plus on the 240 plus on the SPYs. This is the trigger, and if somebody followed, which I did very diligently and shared with all my members and free trial subscribers, that as long as the slow stochastics keep on trending higher, the noise, and this is noise, all these candles are noise, this noise gets diminished and you can stay with that trade. You can certainly take profits like we do during the day, 40%, 60%, 100% on the SPX calls expiring on that particular day or expiring on the at the end of the week. But in order to maintain a swing position, you have to. There is no choice, and I've been showing this for years now, and more so in the past 2 years. You have to follow the internals or the internal indicators which cut out, which are the noise that happens during the day. This was the breakout. This was the pivot as of yesterday, the 238.70 level or so, and I showed that very clearly. The market closed here right there at 4 p.m. with a red candle, it means nothing because what this particular slow stows were telling us that there's something out there with the money, the smart money, or the so-called robotic money, or whatever the case may be, was sticking with that trade and letting the retail traders or the human emotional traders jump around like monkeys on hot tin roofs and give up their positions. Once they gave up their positions, after hours, market flattened out a little bit. This can be constituted as a mini bull flag, okay? Um, and then came this big bullish engulfing, and this is the three candle move. As I've said many, many times, on the third candle, you generally have to take profits. There are a few e-mini traders or futures traders in our group who are benefiting tremendously from my work because I don't trade futures. At this point, I don't. I've traded futures before. Um, but I use the proxy of the e-minis to determine the directional bias of the market. The directional bias of the market is very, very, very critical because that allows you to stay within a trade on a multi-day swing basis, whether it be 48 hours, whether it be 72 hours, and you can clearly see that on swing trades, which I'll show the next one of the prime examples of a very successful swing trade, and we have had many, and that's where you get those big fat 300-400% plus type of moves on your initial trading capital or your average cost trade of your options or stocks for that matter, um, and then you take profits. At this point, you're going to hit resistance. It's pretty obvious. I've shown that clearly. And that resistance might pull back towards the pivot again, which, by the way, was Wednesday's pivot. This will be adjusted at the open and most probably will be a little bit higher. Retesting pivots, as we can see, rejection of the pivot. But retesting pivots is standard procedure. So if the market pulls back, let's say 30 points or so down here, it means nothing. As long as the moving averages, the and the pivot holds, and it can slip a little bit below pivot too. It can even come down and test this downtrend channel, which was broken after hours last night, broken up after hours last night. It can even come down here and then make a move up here. So all this is explained constantly during the day. All you all have to do, which I know many of you do and some of you don't, I don't know why, have to really understand that the dynamics of trading and the dynamics of markets are that markets are not straight line up and they're not straight line down. There's a lot of chop in between. That's known as structured volatility. Markets are not linear, markets are algorithmic. They're run by machines. If you haven't accepted that yet, then you shouldn't be a trader. And not in this type of environment. And this type of environment will only become more robotic as we move forward in the coming months and the coming years. So saying all that, um, at this point we are overbought. There are a couple of things that'll happen. One, we can stay overbought, stay above the 70 hours relative 70 marker. Remember this, the stochastics is the first derivative of the relative strength index. Want to know the definition? Look it up on Investopedia. It can stay above that, or it can slip below that and chop its way down and do a reset. Once it does a reset, it's again an aggressive buying opportunity, just the way it was here. You can see that. And this is not the first time you're seeing this. I've shown this a lot on my charts every single day. Every time you get these deep oversold conditions, these are aggressive buying opportunities. In other words, this is where you deploy maximum capital, take profits along the way, or stick with the trade. This was a minor reset, and you can see that. A three candle move, then a pullback. Okay, there's not really more to explain, and this is not rocket science. Now, the resets intraday can happen or within the first 15, 20, 30 minutes as profit takers come into the market. Pretty obvious, tactical buyers like us who bought at the lows will take some nice profits off the open, whether it be Goldman Sachs, whether it be Google, whether it be Amazon. Facebook is down roughly $1 and change. Um, Tesla hit the upper end of the mark yesterday, and the small position in Tesla is going to be down a bit at the open. Tesla's down roughly about $4.80 or 1.5%. Really doesn't mean much. I follow my tactical charts. It's not what we think of Elon or what some traders think of whether Tesla is a fake company or anything like that. Okay, the multiple winners across the board, and you don't have to spread yourself out too thin. You can just be in selective stocks. Regeneron, which I'm going to show next, was a tactical buy off the lows at 325 and then again at 340, 350. Stock is right now at 415 at the open. And when you see my charts, you'll see exactly what I drew weeks ago, what I forecast weeks ago, and showed all of you, or even last week, even the first part of this week, is coming to fruition. So here's your fast stochastics. And the key with the fast stochastics is quite simple. They're fast. So now they're overbought, and this can reset, as the name suggests, these are fast stochastics. They'll reset quicker than the slow stochastics that I showed you a few minutes ago. So this will reset down here, and that could be the minor pullback that we need to get in order to refresh, which is a simple way of saying profit takers are taking in nice profits when they bought at the lows yesterday, as we alerted, and that's what those fast resets are all about. Now, my job is to dissect and go through the go with the tooth comb, go through the details, the minute details, and put out my alerts. If I think the upside is intact, I'm going to say the upside is intact. It's up to you what you need to do. Trade management is key. Many of you find all kinds of excuses. I used to find all kinds of excuses. I don't do that anymore. I don't do that anymore. I can be in a trade. I could be down on that trade for at the end of the day, and I'll take in some very nice profits at the open today. So if you keep on justifying your emotional excuses to yourself all the time, well, I'm not Anthony Robbins, so I won't be able to help you with that. Maybe you should go to the Oprah show, maybe the Dr. Phil show, and talk about it. I'm kidding, but you know exactly what I'm talking about. The biggest competition is yourself, not anyone else. Take personal responsibility. That's the essence of capitalism, as I like to say, and stop blaming the world around you. Focus on technicals. It'll dampen your emotional nervousness, and you will be more of a consistently profitable trader than not. Doesn't mean we can't make mistakes. Doesn't mean we don't sell a little bit earlier. If there's nice profits, take it. But if you're going to make rash, not rational, rash decisions based on minor price movements and noise, which happen in the market all the time, then and not focus on the technical, tactical charts that are being put across and the internals, not just the prices, the internals. And I'm doing all the hard work and putting it out there. Then you have no one to blame but yourself. Saying all that, this will most probably happen the first part of the day. We have the vote coming up on the healthcare bill. Looks like they have enough votes to pass it, but the market's still going to wait till it finally passed. So if we rally into that vote this afternoon, then obviously that's a sell point. But more importantly, uh, aside from those external news, and I've shown that clearly, we have a major resistance here, which was on the 26th of April, um, which runs around the 239.60 level. And I've shown that again repeatedly on my charts. Um, Let me bring in Regeneron. And again, as a technical trader, I'm not. I'd like to see good news, but generally speaking, I don't, real technical traders don't care about the news because the reality is that they're trading off the charts. So this is a beautiful algorithmic, robotic, clueless ape trading chart, and you can see what's going on. Walk you guys through it. This was back on November when Regeneron broke out. We participated in this rally. Massive reversal candle. That's the first stage where the institutional shorts cover. By now, you should all know when shorts cover, that means they buy back the shares that they sold short. You had a three candle move, a gap open. This is something that is known as a white swan. That's my term. The black swan, everyone knows. Something that hits you from left field and you don't know it's coming. Well, this hit the shorts from left field and they didn't know what was coming. Because generally speaking, a straight line 90-degree angle up type of move very seldom happens. It did happen here. And it hit a high of 455 within a matter of days. Whatever the case, a pattern developed. And we played these patterns very, very well. Created a definitive bottom at around the 340 level. Multiple inverse head and shoulders. And then another solid bottom at the 365 level. Alerted my members to buy into it mid-April as well as late April. And this was the move. So even if you missed, let's say, for example, all the zigzags and all these moves, you could have still bought in here as per my alerts. And that's around the 365 level. Do the math. That's 35 plus 10. That's 40. That's a 45-point move. The stock right now is at 410. So it's exactly hit the lower end of the gap as I kept on alerting and telling people to buy the forward calls. The upper end of the gap is 420. Upper end of the channel is 430. Do I think it goes straight up to 430? I don't know. I do know there's going to be some resistance at that 410 level where it can pull back to 399 right there, the breakout level right there, or 400, and then make an attempt to move up towards the 420 level. Whichever the case, if you focus on what I was seeing and sharing on the internals, in this particular case, let's say, for example, the slow stows or the slow stochastics, what we like to call Mr. Slow. Um, uh, this is obviously the fast stochastic that moves around a lot more. So if you look at the slow stow, you're going to see, one second, there you go. So you're going to clearly see here, and again, you don't need to be a technical genius to do this. You just have to, honestly, there's no other word but to say you have to be focused, you have to be disciplined. That's all. And you got to average cost down if it pulls back a little bit, because every single red or green candle didn't mean it was up, straight up. It meant it went up, pulled back down, and then by the end of the day, it went up again. And that's exactly what's going on. And now we're here. So this was clearly showing what was going on. I don't need to say anymore. On that note, I'm going to end this session. It's 20 minutes, 18 minutes long. I hope that all of you are learning. One of the key things about my service, about Clueless Ape Trading, that I'd like to remind everyone is that I explain in extreme detail to my advanced coaching session members, students, as well as my regular members who haven't signed up for ACS or advanced coaching session yet. The methodology and the technicals that are used, the patterns that are created, and all the stuff. There's no mystery there as to why these things are constantly happening and why we are winning overall with ROIs which are beating the crap, excuse my French, out of anyone who's doing anything out there, other services. But I'm explaining, I'm raising the curtain and explaining to them that there's no magic. I think there are very few trading services which actually do that. Explain their methodology, explain their reasoning, explain their thinking. Yes, they can explain all the fundamentals they want, but actually technical, on a technical basis, explaining everything to this fine detail, I think is a tremendous service that is being given for a few dollars a month. to Clueless Estate Trading members. I hope you all understand that. I hope you all tell that to your friends, and we go from there. All right, so couple of quick, let me see if I can get this up again. Looks like it's disappeared. Okay, there we go. So, so here we are with our and a quick run through on the swing 533. It pulled it made a inverted hammer. That's when we got very overbought market wise. This is SPX 533, and then it pulled back. However, this channel is a bull channel that I've shown clearly on the Thinkorswim charts through the follow through days from day 4. Day 13 was yesterday, and I kept on showing what the consolidation channel was. Remember, consolidation channels can be like this, or consolidation channels can go sideways and move in between levels. That's exactly what was going on. Okay. Then we had a very powerful, you can see that clearly, hollow candle. A hollow candle is more powerful than just a regular candle. A hollow candle reversal yesterday. This was yesterday, so obviously it's not real time. This is updated at the end of the day. And now we're on this back within the consolidation channel. Upper end of the consolidation channel is roughly 23.95 on the SPX, and we'll see if the market decides to break out and test the highs, or whether it just fails and just does the chop again. In the meantime, this is heading towards oversold zone. Normally on a strong market, uptrending market, you're going to see it hold around the RSI 50. And again, here's another example of showing you one other thing that I use specifically for swing trades or a directional bias on the market. And again, I'm sharing you, there's no secret here. But I'm not, I monitor about 40 different indicators on a certain day, as I've mentioned before. I analyze a lot of information, news flow, and then put out what my bias is on the markets or in individual stocks. So I don't have time, and I'm not obligated to basically share all of them, but I try to share as many of them as possible. The histograms, the MACD histograms are still strong, and the full stochastics, if they curl up, well, that's what I'm saying. This will probably curl up a little bit now, as of the open today, and this will move up, and that's going to mean that we are going to hit that 23.95 level or so, and try to break out. And a breakout doesn't mean we're going to go to the moon. I think the maximum upside breakout, as I've shown clearly on my Thinkorswim charts, is 2410, 2420, which will cap this leg of the intermediate bull run market. And I believe we're going to see a pretty decent correction, in my opinion, 200 to 400 points by mid-May. This is my opinion. The NYMO is not telling us a lot. It is within a tight band. The pivot on that is right there. We closed below pivot, and again, the lower band of the NYMO, or the New York McClellan oscillator, is here at minus 14. Always remember, simple thing you have to learn from this particular chart is when we get deep oversold, I mean deep oversold, at these levels, it's hands down buying opportunity. Within the first 24 to 48 hours, you get a substantial bounce, and then the market basically pulls back. This is profit taking. Again, anything minus 40, minus 37, deep in the red, minus 80, minus 75 are all very aggressive buying opportunities, regardless of what the news is saying, regardless of what your head is saying, and regardless of what grandma's saying or your friends are saying. These are the technicals which basically dampen your emotional quotient and help you become a better trader. On that note, have a great day. God bless you all. God bless the USA.